let's just go from the top. Thanks for joining. Thanks for coming in. Sorry I didn't see the comments. How's it going? We're just going to go from the top. Welcome back to Bitcoin Season 2, the live stream. Just from the top. Mempool.space. We saw this giant unicorn horn here. This awesome event where OKX was consolidating transactions, bidding against themselves a couple weeks ago, last weekend. We saw a little bit of continued activity, transaction activity increasing, but then, damn, transaction activity fell off a cliff. We still have, a few hundred blocks to eat through in order to get down to like low single-digit transaction fees, but we are just seeing just reduced transaction fee activity. I mean, this coincides with a overall drawdown in Bitcoin price. We'll see. We haven't yet seen the mempool clear for now over a year. This is pretty significant. Going to Alchemia's Dune dashboard, they have a really good transaction fee dashboard. I'm only going to hit two charts on here. One is transaction count percentage, where we can see basically the breakdown of inscriptions versus runes versus normal financial transactions on Bitcoin versus other. And we can see that just by raw transaction count. Runes transactions are still over half the transactions on Bitcoin just by raw amount. Regular transactions a bit over a third, and then inscriptions and BRC20s are another 8%. But what's important here is that even though that the raw amount of Bitcoin transactions are the majority, the fees attributed to these types of transactions, the majority are being paid by regular financial transactions. 28% of all transactions on Bitcoin are runes, ordinals, or inscriptions, which is kind of funny. Casey Rodemore comes up with a couple ideas a few years ago and now accounts for 30% of all fee revenue to Bitcoin miners. Pretty significant, if I do say so myself, but still over 2/3 of fees on Bitcoin just yesterday, and then on average, basically, are going to be regular financial use case transactions. Going to Data Always' dashboard, just going to hit one chart on here, which is the cumulative inscriptions, which kind of shows the rate of inscriptions on Bitcoin. Basically, this gives us a quick snapshot of like the past year and a half of like how fast are inscriptions coming in, what's the inscription activity. We can see like when this blue line, which is a moving average here, when it's steep, then that means there's a lot of transaction activity. When it's flat or plateaued, as it is over the past month and a half, that means there's not as much transaction activity. So we can clearly see that it plateaued immediately as soon as runes hit the chain. We saw a little bit more activity in the first week of June, but it was short-lived. We still haven't seen inscription activity recover nearly to the level it was any time last year, except for October of 23, which is when everyone universally agreed that ordinals were dead at the time. So skipping over to the next Dune dashboard, this is basically the Dune dashboard episode. Gonna look at so-called Bitcoin L2s. So using this dashboard from Thesis, not going to cover all of them, just kind of the major ones which are well tracked. I'm surprised more Bitcoin shows don't do this. I think this is a huge economic actor cohort on Bitcoin, but we're going to review them. This is the Bob build on Bitcoin hybrid L2, kind of both Bitcoin and Ethereum. They've got $300 million in TVL on chain. Not on chain, just TVL deposited into this Bitcoin L2. The majority of that is going to be wrapped Bitcoin. That's the most popular wrapped Bitcoin product on ETH. Then they have TBTC and Sovereign, some staked ETH and some stables. Gonna breeze through this. Mezzo, also 130 million in TVL, 1,100 Bitcoin. 7,000 active addresses. And we saw the majority of these deposits come in April, plateau, but continue throughout May, and a nice little bump the past week. The majority of those deposits are also, I believe, just a Bitcoin peg. Then we have Merlin, the big daddy of new and fancy and flashy Bitcoin L2s with $1.5 billion in TVL. This is kind of amazing to me. 22,300 staked Bitcoin and a staked ETH product on here too. The story of Merlin is that it kind of burst onto the scene in February. I was not really sure even what it was. I was having trouble figuring out their custody model and everything, but they've revealed a little bit more. It's still kind of murky to me exactly how this works, but they allowed deposits, gained about over 33,000 Bitcoin in total deposits. Allowed the withdrawal period back to Bitcoin in April and have remained pretty steady there. I know they had to pause some withdrawals for a while due to issues with on-chain. I would, for all these Bitcoin L2s, you do have to consider how much block space, how expensive it's going to be to get back to the main chain. So let's go to Ordinals. Ordinals marketplace is looking at the Domo dashboard here, 617,000 unique users, 4.1 closing out on $4.2 billion in total volume. We have had some increase tick up over the past week in volume by overall marketplaces. It seems to me kind of anecdotally to be driven by there's usually one or two hot mints or one or two hot tickers for runes or some hot project which drive these. It doesn't seem to be like ecosystem wide. It seems to be kind of localized to the quick goldfish attention span of, oh, this thing's hot, gonna move over to this thing now. So that seems to be driving the marketplace volume. And I did talk last week about percentage share of transactions by marketplace, and I identified in particular like the Magic Eden story. And in the newsletter a week or so ago, I also pointed this out, and I described this where Magic Eden has been slowly gaining market share across the marketplace ecosystem. We did see right here about a week and a half ago, Unisat regain for briefly market dominance as they dropped and announced trading of the pizza token, a 5-letter ticker BRC20. This is kind of a notable sub-narrative within the Ordinals ecosystem of the BRC20 protocol, like iterative evolution. They're going to allow 5-letter tickers instead of 4-letter tickers. So that was kind of the narrative at the time. Magic Eden now has resumed, I believe, almost over half of the transaction activity. I think the other thing that I'm going to point out is that we see continued increase of active addresses within the ecosystem. So Ordinals appears to be having some moderate gradual inflow of new users. I don't think it's yet moved on to increased asset prices, but we will see. Well, it certainly hasn't turned into increased floor prices for these assets because shit is down right now. If you look at the 7-day percentage of like all the top collections, Node Monks, Puppets, Cats, Blob, OMB, they're all down. Puppets are down 20%. The joke in the Puppets is that they want them to approach zero, but I don't think they actually mean that. So right now, the Ordinals market is painful. The majority of all the collections are down significantly. Going to move on to runes. Runes are also down. Dog, Bamp, Pups, they're all down. Epic is up. The only real winner in the runes category this past week has been this little ticker here, $1 billion cat. It's a cat who wears a bee as sunglasses. The meme is strong. It's kind of, I would say, propping up the majority of the new capital inflow, price appreciation in the space, now worth a whopping $50 million market cap. But let's take a look at the overall market cap of runes. It peaked at 2.2 billion 2 weeks ago, and now resides only at 1.78 billion. I mean, this is pretty significant. It's only like a 20% drawdown, maybe 15%. What's going on here? Well, I think that's because even though it feels like runes are really down, the runes market is highly illiquid. We published at Blockspace last week a piece on some of the challenges facing runes to buy and sell. It has to do with the lot size and the ability to split them up and exchange arbitrary amounts of runes in a liquid fashion. So that can be one of the limits. Let's actually dive a little bit deeper into runes. 250,000 mints in the past 24 hours. We've total runes mint fees. This is closing in on 2,000 Bitcoin. We've got 370,000 different addresses minting. I think that that's probably not unique users, but it does seem to be going up. Daily new minters is increasing linearly basically since Genesis. And I think really this chart down here, minters versus traders, is is probably one to watch, because it basically tells you like what's the ratio between who is minting new runes and who is buying and selling. And right now it's been about 50-50. Depending on the pace of the market, it could be like minters could be, if there's a hot mint, minters could be the majority, 70-80% of the runes events of the day. Anyway, so I'm going to wrap up for runes, and we're just going to go on to the news where you get most of the title for this stream. So first one is this article from the Block, which is ETH NFTs are dead. They are very down bad. The Block headline: number of Ethereum NFT traders falls below 4,000 for the first time since June 2021. The headline pretty much sums it up. ETH NFTs, once the absolute number one story across pretty much all of crypto in 2021, with major partnerships from Adidas, Coachella, Starbucks, now down bad. And maybe it's just the same 4,000 people counter trading against each other on Blur. But basically, Ethereum NFTs have not seen any net new user inflow over the past year and a half. Almost all that's been on Solana and Bitcoin. I call it the barbell thesis. The reasonable Bitcoiners versus the incredibly degenerate Solana kids. So we'll see how this plays out. I think this trend will continue, but we will just have to see. Other news, UTXO management throws $1 million into Bank of Nakamoto dollar. It's a rune, which is a stablecoin collateralized with most of the KC Neurotomore related fungible token type digital assets. So basically, BAMK is the ticker BAMK, and you deposit money into a pool to back it, and it spins out new BAMK in a yield scheme. I think it's pretty straightforward how it works, but I think the one interesting thing, which is not in their write-up here from UTXO management, is actually that it implements a quasi-on-chain Oracle system that we see emerge on Bitcoin. I won't go into it here, but basically you can look at Bitcoin's UTXO distribution, and you can actually identify a trend of what the average UTXO size is across a band, and then relate that to a off-chain average Bitcoin price. This is very interesting in that you can basically use Bitcoin as its own oracle for the price based upon UTXO behavior. This should, obviously millions of disclaimers about the long-term feasibility of that, but this is interesting, and I thought that was my main takeaway from this particular UTXO management deposit into Bank of Nakamoto. Other news, MicroStrategy, yes, Michael Saylor yeets another $500 billion into Bitcoin, a private offering of $500 million of convertible senior notes. If you're a macro guy or an equities guy, you know what all those words mean. I'm not going to go into exactly how this plays out, but basically MicroStrategy is up 600% net, I believe, on all of their Bitcoin purchases. So of course they're going to buy another $500 million. Why do you need to do this when there exists now a bunch of ETFs? Who knows? Probably some smarter people, maybe shout out Dylan LeClaire, can give some insight to that. But basically, MicroStrategy is still buying crazy amounts of Bitcoin. Also, the other title on here, Bitcoin sus Bitcoin L2s. I wrote an article here, which is basically like there's 70, now 80 plus Bitcoin finger quotes L2s, which have been identified by a lot of people. You may see this chart here that I have on the screen circulating around. Just frankly, most everything's a multi-sig. Is that bad? Not necessarily. It just means that for the past 6 months, we've been able to see kind of any marketing really just be able to bring in and solicit user deposits to whatever kind of Bitcoin L2 scaling solution. And we're seeing that this is creating a lot of difficulty for analysts like myself or our friends over at Bitcoin Layers to actually track the feasibility or perhaps the novel schemes or just the basic trust assumptions of these Bitcoin L2s. For example, this chart from House of Chimera, which was reposted just a week and a half ago, actually includes one of the quote rollups ZK Sats, which has basically rugged the entirety of user deposits months prior. So I think this is a trend we're seeing right now. I specifically mention, I think, a nice example of projects who do communicate pretty well or are able to differentiate themselves. Babylon, Botanics, Anduro. There's some good roll-up projects, Citrea, Alpin, who have like good, I'd say, proactive marketing and user-focused communication. But it is the Wild West out there. In fact, calling to attention the reality that some of these market layer 2s don't hardly have anything to do with Bitcoin at all. Like, are they actually posting ZK proofs to Bitcoin? No. B squared is claiming zero knowledge proofs, but it's just another Bitcoin multisig. It's a Polygon ZK EVM with another EVM bridge related to a very loosely associated multisig. So, like, again, buyer beware, be cautious. I like to point people to bitcoinlayers.com or org. I forget which one it is. They're doing some great primary research on this. In other news, let's look forward. What's next for Blockspace stuff? Well, this next week I have an interview with Carlinho of Simple Proof about the Guatemalan elections, how Bitcoin, I think it's an underreported story, how Bitcoin played a major role in the Guatemalan election fraud integrity story last year. You'll have to listen. That comes out on Thursday. Additionally, next, Bitcoin tokens came out. This is another side project of Bitcoin Layers, basically categorizing what the token landscape for a lot of these Bitcoin layers looks like. Next, also for Blockspace, you can catch us at the World Digital Mining Summit. Today and tomorrow, you can catch our co-founder, Will Foxley. He will be hosting a panel, and then some other Blockspace content will be referenced on the main stage. Catch the Yawn presentation on Ordinals at the Bitmain conference. Next on the list is the Mining Disrupt. Blockspace Media will be there. We are a official media partner, as you can see here from the Mining Disrupt announcement. It's a pretty cool announcement where it's heavy music playing and saying Blockspace is a part of it. So, you can catch us there. Otherwise, thank you very much for sticking with me, even though I spent the first 10 minutes muted. Look for other Blockspace content, the Gwart Show and the Mining Pod. coming to you later this week, and the Bitcoin Season 2 episode this Thursday. Catch you next week.